Hello again and welcome to my channel one more time. This is your boy Mr. Crypto. In today's video, we're gonna talk about three different things that traders must know before trading cryptocurrency. We're gonna talk about support and resistance, how to identify your selling zone and buying zone, how to identify an uptrend and a downtrend, and how to take advantages of a fake breakout in our trading. If you like all that, then stay tuned. Hello and welcome, a massive welcome to all the new members who came into my channel. I don't have to remind you guys, hit that subscribe, like the video, and follow me on Twitter. I give all the updates about cryptocurrency and everything that you need to know. So that's even an easier way to communicate. Now moving on into today's video, right? Let me make it and break it out simple for you, step by step. So our first step, just to recap everything guys, we are talking about how to identify your buying and selling zone, alright? So now, in my previous video, I've already talked about the moving average. So if you guys don't know what's the meaning of moving average or how to use them in a proper way, I'll leave you the link down below. Then go to the link and watch my previous video. Now, in today's video, what I want to talk about is support and resistance, right? So we have a resistance right here and we have an uptrend. So in my previous video, I mentioned to you how we make an uptrend. So uptrend is a higher low, higher low, higher low, and higher low, right? We're making higher low, higher low, higher. So what the resistance is basically, it's a zone where sellers have control over the buyers, where sellers are trying to push the price all the way down every time we touch a resistance. So the reason why we call it a resistance is because every time that we try to touch our resistance zone, the sellers push the price lower. So guys, just a simple question. Now when you're seeing the chart is making higher low, higher low, higher low, higher high, and we are trying to break this resistance, are you going to short this market? No, right? We're not going to short this market. Reason why? Because I'll give it to you in a simple way. Now imagine that you have a timber door, right? Or you have a wall and you're holding a big hammer in your hand and you keep smashing on this door. When you keep smashing on this door, in the end it's gonna break. So this is the same case. Like, you just gotta have to take it simple and basic. You don't have to make it complicated on yourself. You have a potential resistance, alright, where the sellers are in control, pushing the price to the lower. So every time buyers are trying to push the price, sellers come in, step, and push the price lower, right? Now, what we will wait for a breakout of the previous resistance to turn into a support and retest. When we have our retest successfully with, of course, a bullish candlestick, here we're gonna open our trade, right? We're gonna take our trade in this zone since we have a breakout and we have a resistance with a bullish candle. Now this is in terms of resistance. Now it's in terms of a downtrend, right? So in a downtrend you're gonna come and make something like that, lower low, lower lows, lower highs, and you're trying to come. So what do we have? We have lower lows, lower low, lower low, lower high, lower high, lower high, right? We have lower highs on the top and we have lower lows. So in this moment we're moving in something we call it a channel, right? And we have a potential support, right? We have a potential support in a downtrend, because in an uptrend we have a resistance, in a downtrend we have the support. So are we going to buy from this support and go all the way long? Of course no. Reason why? Because this support may potentially break, and if the support breaks, then we're gonna end up wiping up all the money that we enter in the trade. Or what we can have is a fake out candle. So we will have a fake out candle and then we rise all the way up. So in this scenario, what you need to wait for, you either, alright, wait for a red candle closing below the support that's acting as a resistance, then you can open your short all the way down. Or you wait for a retest and a successful red candle, then you can enter your short rate. Or if it becomes let me just remove this for you very quick. If let's say that we came down and we made a stop loss hunt, right? And then we rise all the way up, you can take this trade after breaking the resistance, which was a support, acting as a resistance right now. So this is in basic rules, right? So how do we identify our buying zone and selling zone? Buying zone and selling zone on the market, we can identify them by seeing how many times the chart has touched to the top or to the bottom, and are we in an uptrend or downtrend, right? Let me take you to the chart and show you a few examples. So I want to take you to this Bitcoin chart, right? We have Bitcoin right here. I'll take you to the 4-hour chart. And in the 4-hour chart, I'm going to tell you how do you actually identify those zones. Actually, I'll take you to 1-hour time frame. It would be better for me and for you to understand more. Alright. So, how do we identify our selling and buying zone? Alright, how do we actually identify the resistance and support? As I explained to you just now, a resistance is a price or a zone where the chart is making higher lows, higher highs, and trying to break a trend, right? So let me take you back a little bit in the chart, and I'll show you a support zone. Alright, so it's right here, guys, right? How do we identify this? Reason why, let me just mark this up for you. Higher lows, higher highs, right? And we have a potential resistance right here. Now, how do we identify this resistance is by looking at the chart and seeing that are we making a higher lows and higher highs? So that means we are going in an uptrend, or are we going in a downtrend? So in this case, we are going in an uptrend. Reason why? Because we're making higher low, higher high, right? Then in the end, we made a lower low, right? So maybe this is a fake out. So this is what I wanted to talk about, but I'll come to it next in the video. So we're gonna draw our buy zone right here, and we're gonna wait for two things, guys. All right, I'm sorry, this is too big. All right, we're gonna wait for something like that. All right, so this is our potential resistance. As I mentioned before, all right, we either all right, have a breakout to the upside and retest, then we can open our long position after that. Or what we can wait for is a full green candle on the 15-minute chart. So moving on to the 15-minute chart, right? If you're trading the zone, let me go back a little bit to it. So if you are trading the zone, you're gonna wait for a 15-minute candle closing above this level. So right here, let me just zoom in this for you. What we have is, we have a retest on a very low time frame. Let me just remove this for you. All right, a retest on a very low time frame, and we have a 15-hour candle. 15 minutes candle closing above the resistance. So in this types of trades, what I will do is I will open my trade position right here. I will put my stop loss below the resistance, and I'll be taking profit from 1 to 2 hour. Depends on what's the trend and what's the condition of the market, but I'll be taking my profit. This is how I'll be taking my trade. Simple and easy. Didn't have to go through so many indicators. Didn't have to call friends. Didn't have to open many trades and close many trades. Of course, I didn't have to learn many strategy. It's pretty simple, guys. All right, it's pretty simple. All you have to know is where is the resistance, where is the support. We come to our support and resistance. If we're breaking up, we wait for a retest or a 15-minute candle closing green, so we can go. Or if we go in a downtrend, then I'm gonna come to this sooner. Now, what if we have fake out, right? What if we have something like, let me explain to you right here. If we have something like, all right, we are now going in an uptrend, right? We're making higher lows, higher highs, higher lows, higher highs. And what we do is we break, then we dip all the way down. Now, how do we actually identify this, right? Because we don't want to lose money. We don't want to just like randomly open a trade and close it 5 minutes after and lost. We want to make sure that all the rules are met. All the requirements are met to open a trade in the right position, in the right time, right? So what if we have a fake out? right here, guys, is a perfect example, right? In the same place. What we're doing is we're making higher lows, higher lows, higher lows, right? Higher highs, and we are going in a channel. This is a channel. Let me just hide those lines for you because I don't want to make it complicated. Okay, we are going in a channel, an uptrend channel, and we have a potential resistance. See, the difference between what I just explained now and here is huge, right? Because what happened here is we went up, made a fake candle, right? So what happened is first 15 minutes candle did not close above the resistance. We didn't have a retest. We directly, boom, came all the way down. So the difference between those zones, I'll show you the difference. Right here, we didn't retest. So if you come in and take a trade right here, potentially where you're gonna set your stop loss is somewhere around here, right? No, I'm sorry, that's too much. Somewhere around here, right? And I'm gonna take my profit somewhere around, depending on my resistance and Fibonacci retracement, somewhere around 1 to 2, 1 to 3 risk to reward ratio, right? But in the end, you're gonna end up wiping off your account. Reason why is because you actually rushed and FOMO, right? FOMO is, so what FOMO means is that the fear of missing out, right? You FOMO into a chart, you open a trade too quickly, you lost your money in the end, and then there is nothing you do. So I want to give you this advice. If you guys are losing money in trading, I know this is not a common thing that I should be telling you, but just leave it, man. Because maybe better than you wasting your money in trading, maybe this is something you can do, maybe, you know, like people sometimes can do things and others can do. Of course, humans can do anything, right? And you also can do anything. But if you feel yourself that you're unable to understand all this technology and all this simple trading strategies, then just leave it, man. You can spend your time with your family or do something else, right? So guys, coming back, the difference between this and that, right, is that we made a fake out right here, but on this we didn't make any fake out. What we did is two indicators we have. First, we have a strong volume, right? We have a strong volume breaking the resistance, and we have a retest on a very small time frame, right? That, of course, if you're taking a scalp, then you're going to go for small time frame, lower time frames. If you're going for swing trades, then you're going to go for 4 hours time frame. The idea is the same. Basically, it's the same strategy depending on what time frame you're using. And here, definitely I had a retest and I had a 15 minutes candle closing right above my resistance, right? So I took my trade and I successfully took my profit. Alright guys, so we already know that if we are in an uptrend, what happens if we identify our resistance and support and how it happens. Now, what if we are going in a downtrend, right? So in a downtrend, basically, as I explained to you, we're making lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, right? And we have our support. So how do we actually identify it? It's just, if you want to identify the best support and resistance zone, always look for support and resistance zones where traders, where it's clearly invisible to traders, right? You want traders to identify this support and resistance zone with you too. So when you enter a trade, we call the smart money. We move our money with other people's money, where other people think that we are going to bounce from the same time, from the same zone. Now, what we have right here is, we have a lower high, lower high, lower lows, lower highs, accumulation, boom. Now, you came and you wanted to short this market. Are you going to short this market right here? No. Are you going to short this market right here? No. What I will be shorting the market is, I have my support, right? So instead of me wasting my time opening many trades and losing all the way down and up, on the way down and up, because I know that I used to do this when I first started trading, I will be planning what's going to happen next, what I'm going to do in my next step, right? What I want to do basically is look at the chart, identify zones, and understand how the market structure moves, right? We have the market structure either an uptrend or a downtrend. Now, when we have this right here, right, we are waiting for a potential retest from this zone, right? We're waiting for a potential retest at this zone and waiting for a 15 minutes candle to close red, right? So now I'm coming to here. Now I'm looking at the chart. I planned, let's say that we don't see this part of the chart, right? And we're looking at the chart right here. So what I'm actually basically waiting for is a retest before a drop. Now, before I take my short, I use just simple patterns, right? Either double top or double bottom. So double bottom is basically like we will have a double bottom like 1, 2, then we go up, right? Or I have 1, 2, and then we go down, right? Like a trade I was just taking right here. Look, I'm already running in a profit when the market is all crashing. The whole market is crashing, and we still be able to identify a profit. I got around 100, I think, and 40% profit, yes, because I went on 20x leverage. I'm not telling you to do the same. Anyways, this is what I'm trying to explain to you basically. So moving on to the chart, now we know, right? We know that we already have a support, which is right here, which turns into a resistance. We have, let me zoom in this for you. We have a 15-minute candle closing red below the resistance. Where I will be taking my trade is exactly right here, right? We go for a short position. I'll take it right here. I'll place my stop loss 2% above the resistance, depending on the instrument, 2 to 3%, right? I'll be setting it somewhere around here, and I will be taking profit all the way down to the golden level, right? So that's around 10% in profit, guys, right? That's around 3 to 1 risk ratio. Of course, I prefer to do 3 to 1. So right here, it's exactly around 3 to 1. So this is how you identify your resistance and support and take it trades. Let me give you an example of this trade, why I took it, which I should have closed it, but it's okay, I am on the video, so just leave it. Let's go to the 1 hour chart and I show you why I'm actually taking this trade. Look, we have a strong support, right? We have a strong support and we have a downtrend. So in my head, what I thought is that, okay, waves been bumping a lot, so maybe I'll plan for something which is either a fall down, retest, and then I will take it on retest to continue falling down, or I will wait for it to make a double bottom. And look what happened, guys. Let me zoom in this for you. We exactly had a double bottom, but even though I didn't take the trade because it was early in the morning, I didn't catch it, we made a double bottom, right? When we made a double bottom, no matter where the trend is, even if Bitcoin is crashing, even if Bitcoin is going to 5,000, we still have a pattern, right? I couldn't catch it here. The reason why, because I was late. What I did is I implemented my Fibonacci retracement, and I found that we are actually accumulating or consolidating above the golden level, right? So if we go to the 15-minute chart, we literally just kept on accumulated or consolidated above the 200 EMAs. And if you go back to my previous video, I have already explained this. If we have the slow moving average passing the fast moving average, then we're gonna take our long. We have this moving average, the fast moving average is crossing our slow moving average, which is the 50 EMA crossing the 200 EMA. This is where you implement your actually like another sign why you should actually go long for a trade. Like if you take cryptocurrency in this matter, it's gonna be easy, guys, right? It's easy. You don't have to use bunch of indicators. You don't have to use bunch of chatting rooms. You don't have to ask a lot of friends and open a lot of positions and closing a lot of positions, losing money, because I ended up doing this before, right? I was doing this before. I learned from my mistake, and my first month when I started making money, I mean being a profitable trader, let's call it, this was the strategy that I was following, right? This was the kind of strategy that I was looking for to plan ahead, to take a trade in the right time, right? This is how you should identify your trade. So let's recap pretty fast. What we did is we identify our buying and selling zone by seeing it on the chart, where whether we are in an uptrend or in a downtrend. We have implemented trade according to support and resistance. We know how to implement our trade according to support and resistance, and we understand the structure. How to avoid fake out, I explained to you. If there is a fake out in a downtrend or an uptrend, then you're gonna deal with it. Thank you very much for watching me. I hope that you enjoyed the video. If you like the video, then please drop a like, subscribe to the channel, and follow me on Twitter. I'll give all the updates. See you in another video.